Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In today's video, we are going to talk about a great dividend company that has been giving dividends for the past 19 years. It's considered reasonably valued and is a major player in safety, high technology products. So if this is something that you want to check out and possibly invest on, hope you like this video. Give it a thumbs up. As always, please remember that this is not financial advice. I'm just sharing. With that said, let's take a look at this company. So the company that I'm talking about is IDEX Corporation. The ticker symbol is IEX. Basically, this is a company that so it is a supplier of highly engineered industrial and technology solutions. So what they do is they provide distributions such as clamps, drying systems used in beverages. They do like apparatus valve, nozzles, and then and all sorts of stuff. So if you look in the website, you can see from clamps that hold airbags safely in place to rescue tools. So if we go to their presentation, you can see they generate about 2.8 billion supplier of highly engineered industrial and technology solutions. You can see from the picture 2021 revenue of 2.8 billion. EBITDA is about 27%. Free cash flow is about 500 million, and they employ about 7,500. Now, if we look at their history, they operate about 90 plus locations globally, as you can see from here. And then if you go look at it, the positions and markets in terms of global presence, 53 in North America, 35 in Europe, 14 in Asia, and then you got 2 Australia and 1 South America. So you can see the global sales by geography. They about 48% is in the US, Europe is about 25%, and the rest of the world is about 27%. So their market is right here, from chemicals to paint, semiconductors, fire safety, energy. They either hold up 1 or 2 positions in their niche market, well positioned in market. Now, if we go a little bit further, you can see their structure. 21 revenue, you can see from their fluid and metering technology, they made about this. And then you got your health and science technology, fire and safety diversified. Now, if we move a little bit further to the performance, you can see the sales about 3.5 CAGR, adjusted operation income, they generate cash flow, you can see, and then the adjusted EPS. Now, if we look further towards the end, you can see the operating returns of capital. So you can see based on the peers, they're right here. Now, if we look down further to the performance, you can see IEX is the blue, and then the S&P 500 is the red. So 250 growth over the S&P since 2011. So pretty solid company in my opinion. Now let's take a look at Simply Safe Dividend. Based on their safety score, they rated as 95, which is very safe. The dividend yield is 1.10. Market cap is about 16 billion, so it's considered a large cap. At the time of this video, it's at 217. Looking down through some of the key metrics, you can see a dividend streak of 19 years without a reduction. During the recession, they have maintained it in the years of 07 and 09. Looking at the dividend growth, you can see the latest is 11%, which is fast. Last 5 years, 10%, which is fast. The last 20 years is just 11, which is very fast. Again, I always like to look at the steady growth. As you can see, based on 2002, 2020, you can see it's just an upward trend, which is great. Dividend streak, they only have 1 year. but uninterrupted for the past 19 years. Now, if you look at the payment details, quarterly is what you'll get in the months of January, July, May, July, and October. Your annual payout would be $2.40 per share, which is about $60 per quarter. Based on their SimpliSafe dividend scores, they look at this as a reasonably valued. Now, if we go down through some of the PE sector PE ratios, about 26, the industrial is about 17. Going down to some of the things that I usually look at, which is the return on investment capital, you can see 17%. Above 8% is the preference. You can see return on equity is about 19% on the 12 months. Now, if we go to Yahoo Finance, you can see 52-week range is 172. At the time of this video is a 217. So you can see the high is about 240. So the low is 172. You can see a little bit more based on their performance outlook. It is bullish. You can see from that chart even. Now looking down to the earnings, you can see 4 beats on the earnings. Now if we look at the financials, you can see again 2.78 billion. In 2020 it was 2.35. Now the recommended trend is about a hold and some buy and strong buy. Recommendation right now is between a buy and hold, so mostly towards the buy. The average is about 224. Currently is about 217, so you're buying it pretty low based on the average. Now if we look at the top institutional holdings, you can see Vanguard has about 8 million shares, BlackRock has about 6, and then you got your other State Street corporations. Now if we swing to Webull, based on their analysis, there's 16 of them. They rate it as a buy. You got about 35% says a buy, strong buy about 25%, and you got some holds in there. Analysis price targets. You can see the high of 280, the average of 224, and then the low of 201. If you look over here, if you want to use the link in the description, you get up to 12 free stocks if you open up a new account. Okay, so definitely check that out if you haven't done so using Webull. It's a pretty good platform. All right, now let's look at bar chart based on their price targets. A high of 230, a mean of 217, and then a low of 200. Based on their analysis for the past 3 months, you can see it's a moderate buy. Breaking it down to the current, you got 11 analysis rated at 5 holds, 4 strong buy, and then 2 moderate buy. Now we swing over to simply Wall Street based on their share price and fair value. Their fair value based on their estimate using the discount cash flow model, about 273. Currently is about 217, so they rate it as a 20% undervalued. Now if we also look at an article on Yahoo Finance, you can see return on capital at IDEX have stalled. So this was simply Wall Street based on August 10, 2022. It just, sum it up, talks about the return on capital employed. So you can kind of look at that and see what that is. They had an IDEX of 70%. That's a satisfactory return, but compared to the machinery industry average of 9%, it is much better. So they looked at that one. Overall, their take is, to sum it up, IDEX has simply been reinvesting capital steadily at those rates of return. Therefore, it's no surprise that shareholders have earned a respectable 93% return if they held over the last 5 years. So take a look at it, read a little bit about it if you want to learn, get a little bit of more idea of the article. Now, last thing we need to do is to go to Robinhood. For the week performance, it's up 4%. For the month, it's up 17%. For the 3 months, it's up 18%, and then you get your year. It's up it's down 2%, and then for the 5 years, it's up 90%. So Today it was just pretty solid. So now if we look down to some of the analysis based on Robinhood, 61% buy, and then you got your hold of 33%, and you got your sell. So my take on this, it's a solid company. Definitely I would look for look a little bit more into that and see if this is something that I like. I know it's something that a lot of companies probably use. It's a solid company to invest on, in my opinion. Will I invest on it? Probably not. I like my other companies, in my opinion. But if this is something that you're investing on and looking at it, I don't see any reason why it won't be a solid company. Great dividend. I would like to see a little bit more, maybe in the 25, 30 year stuff, but that's going to be in the next couple of years. So with that said, please also check out the other videos if you want to learn about other companies that I looked at. Thank you so much for watching, man. I really do appreciate it. Please be safe out there. Stay cool. Keep investing. And I'll catch you guys in the next video, right? Take care. Aloha.